What can you explain to us the benefits and what the understanding of that is?
Yeah, and it's a good question that kind of touches on an overarching question, is that there are quite a few tax strategies open to proper investors, okay? So the IRS says there's a useful life associated with investments. It could be like a factory or like a work truck or something like that. But in the context of investment real estate, the IRS says, hey, this property has a useful life of, I think it's 27 and a half years. And it allows the owner of the property to depreciate their costs over the course of those 27 years. So every year that you go to file your taxes, you have a write-off of 1/27th of the price you paid for the property. And that is basically used to lower the income you've made from the property, which results in fewer taxes that you have to pay. And that's not some weird back-end thing. That's just in the tax code, right?
Yeah.
And so cost segregation depreciation, you definitely have to talk to a specialist about this, but it's essentially a way to front-end your depreciation deductions into a fewer number of years. So instead of 27 years, it'll be quite a few fewer years. And that makes the depreciation deductions larger, which lowers the income more, which results in fewer taxes.
So by accelerating the depreciation schedule, investors are able to take advantage of paying lower tax, not necessarily lower tax, but less tax, because they're accelerating the depreciation, which is an available strategy when you own a true non-owner occupied investment property.
That leads me to a question.
Yeah.
So how does that work? The idea would be to front load that tax benefit through this approach. And then when you reach that limit of depreciation, to maybe look at another property, which would be a 1031 exchange.
Yes, having said that, the IRS has a reciprocal rule on depreciation called Depreciation Recapture. So they let you deduct, but you also have to pay taxes on deductions that you've made in the past. But having said that, it comes down to a math problem, and you really have to pencil out the whole point of the depreciation and these tax strategies and the cost segregation depreciation is you sit down and run the numbers and see what makes most sense. And to your point on 1031 exchanges, absolutely, you sell property X, invest those proceeds into property Y, and you completely defer paying capital gains taxes, essentially inevitably,
right,
until you relinquish your ultimate property.